Hello everyone and welcome back to our FDM journey. Hope you've been practicing reading market structure because today we're going to add a dimension that will completely transform your trading timing. Let me ask you something. Have you ever entered what looked like a perfect setup only to watch it fail miserably? Or maybe you've noticed that some of your trades work beautifully during certain hours but fail terribly at other times. Here's the secret. Most traders never learn. It's not just about where to trade or how to read structure, it's also about when to trade. Today we are diving into the third dimension of FDM, that is time. And by the end of this lesson, you'll understand why timing isn't just important, it's absolutely critical to your success. Think of it this way. You wouldn't try to surf during a dead calm ocean, and you wouldn't try to sleep during a thunderstorm. The market has its own natural rhythms, and today I'm going to teach you how to dance with them instead of fighting against them. Main content, time as rhythm. Time is the rhythm of the market. Time is the rhythms of the market. Just like music has a beat that drives the entire song, market has rhythms that drive price action. And here's what's fascinating. Different trading sessions bring completely different personalities to the market. Think of the forex market like a relay race that never ends. While one team of runners is getting tired and slowing down, a fresh team is warming up and getting ready to sprint. This happens 24 hours a day, 5 times a week, 5 days a week, as different parts of the world wake up, go to work, and then wind down. Let me introduce you to the 4 major players in this global relay race. The 4 major sessions. Asian session, this includes Sydney and Tokyo, and it's like the quiet morning shift at a factory. Asian traders start the day, low volatility and volume. Picture a calm lake in early morning. There might be some gentle ripples, but no big waves yet. During this session, price often ranges or moves sideways. It's influenced by news from Japan, Australia, and the Asia Pacific region. This session is like laying the foundation of a house. It sets up the early support and resistance levels and establishes initial market structure that the rest of the day will build up. The London session. Now we're talking, this is the main event. London is the most liquid and volatile session driven by European banks and massive institutions. When London opens, like someone just turned on floodlights at a stadium, the London Open often sparks breakouts and sets the dominant trend for the entire day. It's like the director of a movie shouting, action. Whatever was set up during the Asian session either gets confirmed or completely rejected, rewritten. The New York session, this overlaps with London in its first few hours, creating what we call peak liquidity. Imagine 2 powerful rivers merging. The combined force is incredible. US economic releases often cause sharp spikes, trend animations, or dramatic reversals. New York either confirms what London started or challenges it completely. It's like having a second opinion from a specialist doctor. Sometimes they agree with the first diagnosis, and sometimes they completely disagree and change the treatment plan. Session personalities. Now here's what you need to understand. Each session has its own personality. Just like people you know, the Asian session is like that quiet, methodical friend who likes routine, low volatility, sideways movement, and perfect for mapping your levels, but terrible for chasing breakouts. London is like that energetic friend who's always ready for adventure, explosive volume at the open, strong trends, decisive breakouts. When London wakes up, things happen fast. New York is like that unpredictable friend who might agree with you or completely surprise you. High volatility, driven by news, and when it overlaps with London, you get some of the most explosive moves of the day. Before we continue, I want you to think about your own trading. Have you noticed that your trades perform differently at different times of the day? Most traders have, but they never connect it to session timings. Session opens, closes, and news. Now let's talk about the most important timing concepts you need to master. Opens, closes, and news releases. Session opens, especially London and New York, are like the starting gun at a race. Fresh liquidity floods in, news hits the market, and you get volatility spikes and breakouts. It's when the market shows its true intentions. Session closes are the opposite. Think of them like the end of a work day when everyone's cleaning up their desk, traders start taking profits, reducing risk exposure, and liquidity drops. This often triggers retracements or even news releases are like unexpected announcements over the loudspeaker that can change everything instantly. They are usually timed around London and New York sessions. They can redraw the entire map of levels and structure in seconds. Typical behavior at boundaries. Let me walk you through what typically happens at each major transition. London Open, this is breakout or fake out time. Institutions, we have liquidity, and whatever was building pressure during the Asian session explodes in the intended direction or gets violently rejected. London lunch, activity reduces, like a coffee break at work. You'll see consolidation patterns forming as traders step away from their desks. New York Open, fresh volatility arrives as US traders wake up and either confirm London's direction completely or challenge it completely. London close, this is the retracement time. European traders are heading home, taking profits and reducing risk. New York lunch, another well-tight range, like the calm before the afternoon storm. New York close, markets often fade their moves as liquidity thins out and traders close their books for the day. The key insight, each boundary is a transition point where you should either expect acceleration in the current direction or pull back against it, while reversals happen at closes. This is crucial to understand. Reversals cluster around session closes for three main reasons. First, profit taking. Traders who made money during the session want to lock in their gains, which creates buying or selling pressure in the opposite direction. Second, risk aversion. Smart traders reduce their exposure before liquidity gets thin because thin markets can be dangerous and unpredictable. Third, thin markets themselves. When fewer people are trading, it makes less money to move price. It takes what? Less money to move price, making sharp reversals more likely. These behaviors often happen right around the key levels we've been learning to identify, which is why understanding all three dimensions together is so powerful. Session trends and trading. Here's something that catches many traders off guard. Trends that develop inside one session often fade when a new session begins. Think of it like this. London traders might drive price higher or morning based on European news and sentiment, or what happens when New York opens. American traders look at the same chart with fresh eyes and different priorities and maybe completely different news. They might see that London move was overdone and start selling. It's like having a conversation where everyone's speaking a different language. London speaks European, New York speaks American, and they don't always agree on what price. The one session rule. Now I'm going to share with you one of my favorite rules that has saved countless traders from overtrading and confusion. The one session rule. Trade only one session per day, that's it. Why? 4 reasons. Number 1, consistency. Each session has its own rhythm and you need to learn one rhythm really well rather than trying to dance to multiple beats. Number 2, focus. This prevents you from chasing trades in completely different environments and losing your edge. Number 3, energy. Trading is mentally exhausting. Conserving your mental capital for one high-quality session, spreading yourself in across multiple sessions. Number 4, clarity. When you journal your trades, you can clearly see how well your strategy works in that specific session or environment. Weekend and holiday effects. Don't forget, weekend and holidays, these create what I call market gaps, both in time and price. The thin liquidity over weekends can cause price gaps when the market reopens, or that pent-up pressure releases at once. Holiday sessions show choppy, indecisive action because many professional traders are away. It's like trying to have a serious business meeting when half the people are thinking about their vacation plans. The power of overlaps. The most explosive periods happen during session overlaps, especially London, New York overlap. This is when you have maximum liquidity and the highest probability of major trend shifts. Think of it like having both the day shift and the night shift working at the same time. You've got double the workforce, double the energy, and double the potential for big things to happen, bringing it all together. Remember, we are building the 4-dimensional method one rail at a time. Dimension 1, levels tell us where the battles will be fought. Dimension number 2, structure, tells us how the market is likely to behave. Number 3, time, tells us when those behaviors are most likely to occur. And when you combine session timing with levels and structure, you've already learned to gain a precise edge in not just anticipating moves, but knowing exactly when they're most likely to happen. The market's heartbeat. Think of mastering the time dimension as syncing with the market's heartbeat. Asian sets the stage, like opening act before the main concert. London drives direction, Right, the headliner taking the stage, New York confirms or reverses. The encore that either continues the theme or surprises everyone. Opens, ignite, closes, retrace, overlaps, explode. Right, a rhythm that drives the entire show. Recap and motivation. Let's recap this game-changing lesson. We learned that time is the rhythm of the market, with each session bringing its own personality and behavior patterns. We explored how Asian set the stage, London drives the direction, and New York confirms or challenges that direction. We explored how Asian sets the stage, London drives direction, and New York confirms or challenges that direction. We covered the critical importance of open and closes, why reversals cluster around session boundaries, and how news releases can instantly redraw our entire market map. Most importantly, we learned the one session rule that will help you stay focused and consistent. You know what's exciting? You now have the 3 of the 4 dimensions of FDM. You know where to look for trades, meaning levels, how to read market behavior, meaning structure, and where to expect the most significant moves, time. But here's what makes me most excited for you. You're starting to see the market not as random chaos, but as a logical, rhythmic system that follows predictable patterns. While other traders are confused by conflicting signals at different times of the day, you know exactly when to be aggressive and when to be patient. Your homework this week, pick one session, just one, and focus all your attention on learning its rhythm. Watch how it opens, how it behaves during its active hours, and how it closes. Become an expert in one session's personality before trying to master others. In our next and final lesson, we'll bring everything together with Dimension 4, Dimensional Alignment, where I'll show you how to combine levels, structure, and time into a unified trading approach that gives you exponential edge. You're almost there. Keep practicing. Stay focused on one session, and I'll see you for a final dimension. This is where everything clicks together beautifully. End of script. Approximate duration 6 7 minutes when delivered. Naturally scripted.